Google's Q3 earnings are in, and the stock is reacting negatively to those reports, down over 5.5% in the after hours. We will get into the numbers. We'll take a look at the revenues, the profits, the cash flows, the balance sheet, all the things that are impacting Google in the after hours. We'll take a look at some of the specific business units like YouTube and like Cloud and see how those performed in the most recent quarter. We'll take a look at the valuation of Google as well. We'll take a look at the forward revenue estimates. Are these going to have to continue to be walked back? Because I'll talk about how these forward estimates have been walked back tremendously over the last couple of months. Are they still too high with Google? We'll discuss the Q3 quarter in depth, and we'll also look at Google from a technical perspective on today's show. The most in-depth report that you'll see with Google's Q3 earnings will be here on the Investor Channel. What is going on, investors? Hopefully you guys are doing well out there. We're live from Las Vegas here covering Google's Q3 earnings. Year to date, the stock is down 28%, and it's not getting any better in the after hours. The stock was up about 2% during the regular trade. Now I'm seeing this stock down nearly 6% in the after hours. So we're looking at about a 4% move over the last 24 hours. That's on the heels of these Q3 earnings, which came out after the bell today. Revenue coming in a shade over $69 billion. That was just 6% year over year revenue growth, but that missed expectations by $1.56 billion. And those expectations were drawn back considerably. Okay, expectations for the quarter was revenue expected to be about $70.6 billion. I just talked about how it was going to be $69 billion. That was the actual fact. Now, the original Q3 estimate just a couple of months ago was actually closer to $73 billion. So just a couple of months ago, we were expecting $73 billion. Wall Street was expecting 70, and Google just put up $69 billion. Yeah, that's why your stock is down in the after hours. Now, on the earnings side as well, we're seeing a pretty big miss there. Just $1.06 in earnings for Google. Estimates were closer to $1.26. That would have represent over 10% downside growth. So we are decelerating on those revenues for Google. Let's come over to the numbers. We'll take a look at them. You had your $69 billion worth of revenue in the most recent quarter. It was $65 billion last year on a quarterly basis. Your Google search and other up fractionally from about $38 billion up to about $39.5. YouTube ads actually contracted year over year. You're at $7.2 billion last year. Now you're at an even $7 billion where you were a quarter ago. So sequentially, you are seeing declines here as well. You're at $7.3 billion on Google ads just last quarter. That has sequentially declined to about $7 billion. All important, Google Cloud obviously still showing very strong growth from about $5 billion of revenue up to about $6.9 billion worth of revenue. That's $6.9 billion still showing relatively strong sequential growth as you see Google usually averaging about $300 to $400 million worth of revenue additions every quarter to Google Cloud. The 6.9 is, about $500 to $600 million more quarter over quarter in terms of that revenue. So that's actually pretty good for Google. The thing that we've been monitoring on this Google Cloud business is it at the tipping point of profitability? And not quite yet. You see Google Cloud for the most recent quarter, this is operating income down here. You had $699 million, we'll just call that $700 million worth of losses in the Google Cloud business. You notice last year on far less revenue, you actually lost about the same amount of money, about $644 million. In terms of those losses quarter over quarter, you see that you lost about $853 million just last quarter, and they lost significantly more than that in the previous two quarters. So I am seeing if there's one positive out of this report, there's probably a few other positives, but the one positive that I am seeing is Google Cloud actually had pretty strong growth both year over year and sequentially, but also those losses kind of shrunk in the most recent quarter, not necessarily compared to last year, but kind of over the most recent two quarters. Significant improvement there. When you flow down to total income from operations for Google, just $17 billion. I say just because last year on lower revenue, you actually had higher income from operations, 21 versus $17 billion. Let's flow down to the balance sheet. That is where still some good things are happening with Google. Now they had considerably more cash at the beginning of the year, about $139 billion. That is down to $116. We'll see where some of that cash blew through when we get down to cash flows. My guess Most of it went to share buybacks. In the most recent quarter, inventory ticked up. They had those new phones launched. My guess is some of that inventory build is related to that. The fact is this company has very few liabilities, just $14.6 billion worth of total debt, and total liabilities coming in at just $104 billion. And this company has more than that in cash, let alone total assets at the company. From an operating perspective, you've been hearing a lot of talk about these tech companies cutting costs. We didn't really see evidence of it in this most recent quarter. All those cost cuts, I don't think you're really going to see a lot of evidence of that until maybe next year. These are still pretty minor, kind of either pausing on hirings, or we saw Microsoft maybe lay off about 1,000 employees. This isn't enough to really be more than just a really tiny rounding error on these companies, but they have cut back on some projects over at Google, and I still don't think you're going to see evidence of that until next year, because you see your cost of revenues year over year ticked up along with your revenues. Okay, you went from $65 billion in revenue last year up to very close to 70. We'll call it 69 billion. Your research and development ticked up pretty meaningfully from 7.7 billion all the way up to 10.2. Sales and marketing went from 5.5 up to nearly 7, and your general administrative remained relatively flat from about 3.3 up to about 3.6. Your total costs and expenses year over year went from 44 billion up to close to $52 billion. That's nearly $8 billion worth of additional expenses when your revenues grew less than $4 billion. This is what the executives were seeing just a couple of weeks ago, and certainly a month or two ago, when Google really started to tightening the belt on its employees. This is what the revenue trends and the profit trends that the executives were seeing, because this is pretty negative. When you only grow your revenues by about $4 billion and your total costs and expenses nearly double that, that's a problem. And I do like to see that Google is being proactive, at least from a press release perspective. It hasn't shown up in these numbers. We'll probably see that closer to next year. Your net income obviously going to take a large hit when your expenses outpaced your revenue growth. Net income last year was 18.9, nearly 19 billion. Now this year, closer to $14 billion. That means your earnings per share is going to be reduced from $1.40 last year down to $1.06. That's offset a little bit by the fact you really reduced the number of shares outstanding, 13.5 last year down to roughly 13.1. So that earnings per share, if you compare it to the diluted outstanding last year, even worse actually year over year. Let's see if it paints a little bit different story when it comes to cash flows. So your net income went from about 19 billion last year down to about $14 billion. You had slightly more depreciation, considerable bit more stock-based compensation. In fact, over $1 billion more of stock-based compensation for Google. We flow down to net cash provided by operating Google, went from 25.5 down to about 23.3. So we're seeing profits down. We're seeing revenues only tick up marginally. We're seeing net income and earnings per share also tick down meaningfully for Google. Year to date for a 9-month basis paints a similar story, although it highlights how rough this Q3 actually was for Google, and the fact that our cash flows from operations basically flat year over year, right in that $67 billion mark. Companies spent more on property, plant, and equipment, $7.2 billion versus about $6.8 last year. And you come down here and you see the major expense in the most recent quarter is this repurchase of stock. Last year, they did about $12.6 billion worth of buybacks. They accelerated it in this most recent quarter to $15.4 billion. This insulates you a little bit if you're a shareholder, obviously from an earnings per share perspective. But if you believe Google will be able to reaccelerate its revenues, reaccelerate its earnings, well, the buyback at today's prices obviously could be something that benefits you as a shareholder later on. Speaking of evaluation, I mean, this one from a price to earnings trailing 12 months hasn't been much lower over the last 10 years with Google. Now, when we start to look forward with this company, at least from an earnings and a revenue perspective, I tell you what, that forward estimate for next quarter coming in at $79 billion. So we just talked about how Q3, the original estimate for Q3 was for $73 billion. Expectation was for 70. The company put up up $69 billion. Now, for Q4, the original estimate was for $83 billion for Google. The current estimate is at 79. We'll see how much further underneath, because I don't think Google's going to come up with a quarter much greater than $79 billion. In fact, I'd be surprised if they come anywhere near that in the fourth quarter. That would represent under 5% growth. Somehow, magically, this company is going to reaccelerate this revenue growth to double digits into the back half of next year. Obviously, if they're able to do that and maybe stem some of the bleeding from the earnings perspective, well, the stock probably still a relatively decent buy at the current valuation, because like we talked about, when you look at any valuation metric for Google compared to itself and even the overall market, the stock's not wildly overvalued. Certainly from a price to sales, price to earnings, depending on what metric you're looking at, not necessarily the most wildly overvalued stock, but you are giving them the benefit of the doubt that they will be turning things around towards the back half of next year. Now, from a technical perspective, today's increase during the regular session of close to 2% is going to be offset by likely a decline in the stock in the regular trade, and tomorrow by down 5.5%, maybe more. That is still above some of the lows that we made in this stock just a couple of weeks ago. Down here at about $95 per share in the after hours. The stock is trading at about $98.50. During the regular trade, it was closer to $104.50. I don't think these earnings report makes this like something that you have to run out and buy tomorrow, especially in large quantities. But the results are just good enough to where I don't think long-term shareholders of Google are going to be looking to bail on this company like they were in Meta, like in Q1 and Q2. It's certainly not that type of situation. This company is still churning out positive cash flows, positive not from just an operating perspective, but positive cash flows after you factor in all the investing activities, including a large $15 billion buyback. Obviously, that buyback that Google is executing on will have a layer of support. The company still has a mountain of cash that is almost unrivaled in this market. They have almost no use for it other than to buy back the shares. Given the regulatory environment, they can't go buy a Snapchat. They can't go buy some other bewildered social media stock like a Pinterest or anything else that is just taking a beating. The regulatory environment is just not going to allow that. So this stock will be supported by the fact that they'll do those share repurchases. And if you believe that the growth will reaccelerate from a revenue perspective towards the middle and back half of next year, well, this can be a stock that you accumulate over a short period of time. I just wouldn't necessarily expect this stock to rebound anytime soon. And from a technical perspective, this downward trend line that we have marked out here with this upper green line and this lower black line, this downward channel is not going anywhere. The stock is going to be stuck in this downward channel. You're looking for it to eventually break out above the top of the channel, and it doesn't appear that that's going to happen anytime soon. That was Google Q3 earnings. Hopefully, guys enjoyed today's video. We'll be back again soon with more. Be sure to join us on Friday for the FANG Stock Recap Show, where we talk about more of these earnings with Google and the rest of these tech companies. Good luck with your investments.